We're going to talk about some alternative chart types today. There's a lot of unique ways to chart price, to track price, to do technical analysis. All right, so we have our control panel up here, right? Control panel does everything. This thing is awesome. So I'm going to go to the new button, and I'm just going to click on chart. It's going to open up this dialog box. It's called data series, but I'm launching a new chart. You can use the drop-down menu. It's a smart search. You could type in the word gold or whatever. It'll show up. But I'm just going to pick the very first one, E-mini S&P September 2024. It's going to populate that in the applied area, right? So now I got to decide what type of chart I want, right? What parameters I'd like to apply to the chart. Right away, it says data series type minute. So if I wanted to do a 1-minute chart, it's fine. If I wanted to do a 10-minute chart, I change that to a 10, 30-minute chart, change that to a 30, et cetera, right? Go down here to chart style, candle chart, right? Basic candle chart. Everything else here is more or less cosmetic. I'm just going to hit OK, and we're going to launch this chart. This is just really a naked candle chart, right? There's nothing on it, but we have more options than this. This is time series analysis, right? So every 10 minutes, a new candle is born, and the old candle is painted on the screen. It can't change, right? It's memorialized, an open, high, low, close price, and it shows you history going back in 10-minute increments, right? It's kind of easy, 10-minute increments. So let's go ahead and make a different chart though, because we have other ones. I'm going to right click and go to data series. Right away, I'm going to look at type again. I like the candle so far, but I'm going to click on this drop down menu. You can see we have tick charts, volume charts, range bars. You can do charts in seconds if you're really super quick. Minutes, daily chart, intraday, weekly chart, monthly chart, year, right? Heiken Ashi. I'm sure I'm saying that wrong. Kegi, Renko, point and figure, line and break, and volumetric. So these are relatively common choices, believe it or not, right in here. Let's start with tick. So we'll change this chart to a tick chart. This bar is not time sensitive, right? In other words, if so many trades have happened with a predefined amount of them, then it's going to go ahead and populate a new candle. Let's just go ahead and just, I don't know, let's change this to, instead of 150, which was the default there, let's make it a little bit bigger. Let's make it 250, all right? So I'm going to change it to 250. Everything else is cosmetic pretty much. We'll hit apply. So now it still looks like a candle, but the time at the bottom is kind of irrelevant, right? We're saying, hey, for every 250 trades, we want a candle to be completed, and then we'll start building another candle and so forth. So time is going forward for sure. It can't go backward. We all know that. But the candle isn't necessarily built in any given time frame, right? It's just once that amount of trades happens, then we get a new candle. It's called a tick chart. A lot of people like tick charts as a different kind of way to filter. And again, I have it set at 250. That's kind of up to you to choose. At the end of the day, it gives you a candle chart that lends itself to technical analysis, right? So this is pretty popular, actually. Right click. I'm going to go to data series. And again, I could amend it, right? If I want to make this 1500, I could type it in 1500. Every time we have 1500 trades, then boom, we're going to get a new candle. It's pretty basic. And then you could apply any other techniques you want on this. Now, you could have as many charts open as you want. As an example here, let me kind of minimize this a little bit. And so I could just right click at the top bar here and duplicate the window. It'll give me the exact same thing that I have. We're cloning this chart. 10-minute chart on the left, and on the right-hand side here, now I could do something different, right? I could right-click, and I can go to data series again. And let's say instead of tick charts, let's say that I want to try range bars, right? So I changed my type to range bars. Now, value is going to define your range here, right? The default's 4, and that makes a little sense because it's E-mini S&P, but I think the standard might be 8, might be 12. You know, in my mind, I like to have an evenly divisible for the tick size. So I'm going to change this to 8. So I'll hit apply and OK. Range is 8. Remember that. So let's look. There's wicks here. Every single bar is 8 ticks tall, right? Once a candle achieves that 8-tick designation, then it's completed, and then a new candle will start to form, right? So we just saw one form right here. So if you measure high to low on any one of these candles, they're all going to be 8. So once you hit 8, boom, a new bar is formed. So during the opening range, it'll probably take a shorter time. Middle of the day, it'll probably take a longer time. Time isn't as important here as the size of the actual candle. That's what defines the range. And some would say, well, it takes out some of the noise associated with just a regular candle. Because we see in regular candles, you get these big wicks, right? In this case, you won't. The biggest wick is possible is 8 ticks. Can't get any bigger than that. The wick can't get any bigger than 8 ticks the way I have it. So you'll see up here in the dialog box, it says 8 range. It's kind of reminding me, all right, that's the 8 range right there. The main takeaway here is focus on the tick increment. You wouldn't probably make this a 3 tick range bar. It's not an even number associated with the tick size of an E-mini S&P. So, crude oil, you might want to go 10, you might want to go 5, something that's divisible. That's more best practices, really. If you see something unique in the ointment, then go for it. I don't want to discourage innovation, but something to think about. So range bar here, I'm going to put this guy down, and then I'm going to pull this guy down. I am going to right click and duplicate again, and it's going to give me another range one, right? And remember, if I ever want to toggle back, right click, data series, and I just want a regular minute, 10-minute candle here, apply and okay, and then you're back to that view. So it's really easy to toggle around. So let's go to the next one again. Right click, data series, and then daily is kind of self-explanatory. It's just a candle. Same with the weekly, same with the monthly, the yearly. That's like long-term. We'll do Heiken Ashi and Kagi, but I want to go to Renko because this is the next one that's relatively easy to explain. So I'm going to hit that. And again, Renkos are bricks. They're called bricks because you're going to set the size of the brick. Similar to range bars that have a wick, Renko won't have a wick. So I'm going to go ahead and set this to 8, right? Because that's 2 points in an E-mini S&P. I think that's reasonable. I'm going to hit apply, okay. Notice there's no wicks. The difference here, once 8 ticks are achieved, that's not good enough. We have to be either 8 ticks above or 8 ticks below the previous bar. And as Manny says, Renko are great for scalping on the NQ. So right away we have somebody who's like, hey, in tune with how these work. But you can see that the candle is fighting right now, right? It's not going to be complete until we're 8 ticks above here, right? Until we get to 54.84, then it would be complete. Or if we get down to 54.78, just going back to break even won't be enough. You would think, well, this is 8. Why can't we have an 8? No, there's no equal and opposite here. It's additive. So we need to get to one of these 2 levels for a new bar to form. And again, the idea is let's take out some of the noise associated with wicks, associated with volatility, and let's look at the trend. The trend might be a little bit more important for some traders, which it should be, by the way. This gives you the ability to do that. And again, I have it set at 8. You could set it at 4. You could set the bar width to be wider. I kind of like this view. I think it's easy. And again, you could do your technical analysis. These bars, again, they're not time sensitive. We could be hanging out here forever before a new bar is formed. There we go. We just had a new bar formed. We just witnessed the birth of a new Renko bar. Now again, doesn't matter how long it takes. If it's a quickly moving trend, this bar is going to complete fast. If it's a slow moving trend, it's going to take a long time for this bar to complete. It's an interesting concept because it does kind of declutter your view. It's like, all right, I don't really care about the wicks that much. I'm interested in catching these trends. Again, it's not time sensitive. We don't know how long this took. Well, we do because we can look at the bottom. We can catch that trend up. And that's, I think, how I would apply this particular technical analysis technique is to think in terms of trend here. Now, maybe we're kind of sideways, we're kind of choppy. The sense that because I set it to 8, the range is going to be 8. So there's support right there. And then I'd probably draw resistance up here. And, we can go sideways with these Renko bars the rest of the day, just like any other chart. Pretty powerful tool. Let's do another one. There's a lot to choose from. So I'm going to go back and I'm going to right click and I'm going to duplicate my window on my 10-minute candle. And then I'm going to move this guy down. You can see what I'm starting to do, right? I'm starting to build a chart book. So now we have another 10-minute. And the reason I have a 10-minute in the upper right is now I can modify it, right? I can create another type of chart. So I'm going to go ahead and just right click again. Data series. Let's go back to Heiken Ashi. I can never say that word. We're going to go ahead and click it. And, I have it on a minute chart right here. So this is the base period value. You have to decide on how you want to set that. Let's go ahead and hit apply. Okay. So this is the formula. And you can see there's averages, right? The close is averaged, the open is averaged differently, and then you got the high max and the low min. So it constructs these bars a little bit differently. And I don't know who made this up, but it's used to analyze trends. Once you become an expert at it, it could be a powerful trend finding tool. You could use it in any market. And there's specific signals that one would look for with this particular chart. And you could even compare it with your candle, right? You can compare it with your regular candle chart. So you can see it looks substantively different. I have this on a 1. I could change the time frame to 10 or to whatever. So you could see every minute we're getting a new candle. And if I wanted to change that again, just right click, data, change that to, I don't know, base period could be 5 if you want, hit apply and okay. And this is what it looks like on a 5-minute chart, right? All 4, one screen. If you have a multi-monitor setup, even better. You could put them on different monitors. And look at that Renko on the lower right. Sideways still. A Renko trader might say, well, until we get 3 bricks in the direction, I'm not going. I'm not getting long. That could be a trade idea associated with all of your other technical analysis ideas that you may or may not have. Kagi, I don't know much about this one, but I'm going to pull it up anyway. Now, this isn't a candle. What is this? This looks different. Right, it is different. It's like a moving line that's tracking price. It is time-based. Each one of these is 5 minutes, and you can see it's color-coded, and it's just another charting technique. Right-click data series, volumetric bars, just do 5. And you have these bars, and it shows each tick level. The smallest increment is called a tick, and it shows you basically the delta, right? You're looking at the delta. Trades on the bid, trades on the offer, and it's color-coded. When you can see at the top here, not surprisingly, trades on the bid, trades on the offer. Nothing got past the offer here, and we pushed back down. That's kind of the easiest way to get the sense of what's happening here. And it's in a heat map type of format. Traders will look for levels of interest, where the bid offer's big, where the bid's big, and then just kind of envision that from an unfilled orders point of view or an historic point of view, and it can kind of give you some inflection points, some areas where it's like, all right, we're depleting inventory, we're depleting the offers, we're depleting the bids. Again, this is kind of a unique technique, volumetric bars. Going back to that type, there's other stuff here too we didn't get to yet. Pretty powerful stuff. Right-click, data series. Go ahead and do some experimentation. I highly recommend it.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.